we'll see a blow off here very soon, a blow off top in the equities, and then a collapse, a full out collapse in the equity market in everything, leading to a commodity supercycle where he's predicting, silver at 500 or 750 and gold at 20,000. Who knows where these things go? But then again, I will tell you that the positioning by the biggest money in the world is continuing. The deliveries are continuing, and the lengths at which they're going to not allow this to blow off yet, in looking at PSLV, seem to not be waning as well.
Andy Schectman predicts an imminent blow-off top in the equities market, followed by a full-scale collapse across all assets, leading to a significant commodity supercycle. They reference forecasts of silver reaching $500 to $750 and gold hitting $20,000, emphasizing that large financial players remain strategically positioned. Despite signs of an impending market shift, efforts to suppress the breakout in commodities, including PSLV, a silver trust, remain strong. The speaker, Andy Schectman, a precious metals expert and CEO of Miles Franklin, highlights market manipulation in silver, mainly through heavy shorting of PSLV to suppress prices and prevent increased physical silver purchases. They discuss SEC rules allowing significant rehypothecation, enabling large-scale shorting to keep silver prices low. Meanwhile, central banks and institutional investors are increasingly shifting to gold, with China's major insurers joining the Shanghai Gold Exchange. The rise of gold-backed stablecoins and growing concerns over U.S. Treasury stability suggest a broader move away from the dollar. Despite short-term market fluctuations, the long-term trend indicates accelerating demand for precious metals amid economic uncertainty. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Now let's shift our attention towards the interview.
Amount of shorting that we've seen in PSLV, that it got absolutely crushed in terms of short interest in a matter of an hour. In 1 minute, you saw, literally thousands of shares dumped onto the market, and just like that, maybe even more than 1 million shares, that drove down naked shorting PSLV. And the rumor behind it is that the reason they're doing that is to disincentivize not only investment in silver, but when there is a increase in demand in something like PSLV, they have to go out and actually purchase silver for the trust. And if you have all of this shorting of PSLV that is greater than the demand in PSLV, they don't have to go out and buy more silver. So they can short the share. And I was, looking at shorting. I found it interesting. And people should think about this in terms of the great taking, in terms of the difference between something like PSLV, which can be shorted, versus holding it yourself. This is SEC Rule 15C3-3. In the United States, the Securities and Exchange Commission regulates rehypothecation through Rule 15C3-3, which limits the amount of a client's securities that a broker-dealer can rehypothecate to 140% of the client's debit balance. So all of these shares that are then borrowed are shorted. They drive down the price. They have to, at some point, buy those shares back. But at this point right now, where there's so much demand in silver and they're still trying to keep the price down, this is a very dangerous time, and they're using PSLV as a tool to hold it down. I also found it interesting. I found a statement when we think of maybe the prospects of where silver could go from Donald Trump, and it stated 1/17/2017. Silver is the most undervalued asset on the planet. It's been money for all of human history. Massively short PSLV to keep the trust from going into the open market to buy more silver, which pushes the price up. I found it interesting, a tweet from Max Kaiser the other day, who is the Bitcoin maxi, has spoken out against gold for a long time. He was a gold bug for a long time, completely shifted, talking about stablecoins. He says a stablecoin, and this was just, he tweeted this on March 22nd, a stablecoin backed by gold would outcompete a U.S. dollar-backed stablecoin on world markets. Russia, China, Iran should take note. I would argue they are, and they have been. That's the whole the whole concept of the unit settlement currency, which do not think for a moment that's gone. It would track inflation. The U.S. dollar does not. You're guaranteed to lose purchasing power in the U.S. dollar. The U.S. dollar has no volatility, but again, you're guaranteed to lose purchasing power. Bitcoin is deflationary but volatile. Gold tracks inflation and is minimally volatile. Why wouldn't Russia, China, Saudi, and Iran do this? Well, they are. I think they are dealing more in gold than they are in U.S. dollars. That's the whole concept of treasuries being dumped and gold being acquired. I found it interesting to come from Max Kaiser, this little tidbit. I saw another, it was interesting because there are some people that I respect that I wouldn't think would say they agree with this, but they did. I'm gonna leave out the people who agreed with it. I just don't want to go there, but suffice it to say, it says, the tweet was, "It seems the whole point of Bitcoin was to provide liquidity for U.S. treasuries and quell domestic demand for gold, while preparations were being made for a gold-backed U.S. treasury note, including, most importantly, repatriation of all U.S. leased and rehypothecated gold." Well, let's think about that for a moment. We're seeing the gold come in at levels no one has ever seen, and a lot of it probably was leased out gold and rehypothecated gold. We're seeing it come and flood the COMEX market to levels that no one has ever seen before. You and I have both interviewed Judy Shelton separately, and we know the whole premise of her thesis is to back treasuries with gold that would be redeemable. And certainly a lot of the demand that would have gone into gold in this environment has arguably gone into Bitcoin. While I'm not saying I agree with it entirely, it's a compelling thought process, to say the least. And when you talk about all of this talk of stablecoins now, including Max Kaiser, it is the stablecoin market that is picking up the slack for the lack of central bank purchases, which net since 2014, there's not been one U.S. Treasury purchased by central banks since 2014 net. Yes, there's been a lot of buying by central banks, but more selling than buying since 2014. And the stablecoin market, which is now almost entirely backed by U.S. Treasuries, is providing a major source of demand. Plays out, but when you see desperation, like, a million shares dumped onto the market and shorting PSLV at the open to keep them from going into the open market, in China have joined the Shanghai Gold Exchange as full members. Costs a few $100,000 to become a full member, but they are now, and if they take just 1 or 2% of their assets and put it into silver, the sky is the limit. There are things happening and they're beginning to accelerate, no question about it. And so I guess, look, maybe this is why we're seeing the smart money, whoever they are, shifting to precious metals. And institutional investors have increased their gold positions by over 40% in the last 3 years. So maybe that's why the metal has outperformed the S&P 500 over the last 24 months, really over the last decade. But suffice it to say, things are beginning to accelerate. And, I think the worst thing you can do is get too caught up in the market daily moves, down 15 one day, down up 50, but the amount of dollar increase is. Anyways, lots of crazy things happening, and I think it's literally just beginning. In an interview I did with David Hunter.
In light of these developments, Andy underscores the importance of understanding market manipulation and the shifting dynamics in global finance. As institutional investors and central banks continue accumulating gold and silver, the long-term outlook for precious metals remains strong. With economic uncertainty mounting and de-dollarization accelerating, the stage is set for significant financial realignments in the years ahead. How might the growing adoption of gold-backed stablecoins impact the global economic system? What are the potential consequences if the suppression of silver prices fails and an accurate price discovery occurs? That's it for today. Share your thoughts on Andy's analysis of gold revaluation in the comment section below. If you find this video informative, don't forget to support your Finance Log team and turn on notifications to stay informed about our latest videos.